One word, neo-feudalism. We're being eliminated. This is an extinction level event around the world. We're going back, in many ways we already have it, a two-tier society, extreme haves and extreme have-nots, a control mechanism. And unfortunately, I'm going to say something I've been telling people for a very, very long time. I believe the end result is going to be a great loss of life. The greatest threat to human life on this planet right now isn't nuclear war or war in general, or even a disease process. It is the bursting of the debt hyperbubble.
This is Little by Little with Andy Schechtman.
All right, welcome back, everybody, to another episode of Little by Little. I'm very honored to have with me Gregory Mannarino, the proprietor of TradersChoice.net, but more than that, a hell of an economist, written several books, entertaining as hell to watch, but smart, gets it, has led his people in the right direction, and it's a real honor to have you here, Gregory. Thank you for coming on, brother.
Believe me, the honor is all mine. I am happy to be here. Your fans love you. I love you. And we're going to get this down. We're going to keep our people on the right side of this. That's what it's all about.
Yeah, and I find that to be very intriguing when I watch you, and you're very, very adamant about taking care of your people. Your site is for free. You show people what you're doing. You don't hide anything. And to me, transparency is what creates authenticity and creates trust. In a world that is very opaque, you're a breath of fresh air. So I'm going to jump right into it. And these will be questions that'll be very easy for you. As you know, I've done 4,000 YouTube videos and I focus on economics. But when I'm doing it on the other side and interviewing people like you, people that I follow for my own information, I want to do a little bit of research, and in the research that I have done, I found a lot of things that I think people need to get your clarity on, and you've been talking a lot about it. The first being the Trump train, as you call it, and you've been very clear that cash seeks yield. I agree with that, and that Trump's influence will direct the cash flow disproportionately into risk assets like stocks and cryptocurrencies. We call that risk on. But that global debt will also hyperballoon. This is a big deal. Bond market, the debt market. You mentioned that understanding gold and silver are anti-debt units. You need to understand that, and will be more on sale than ever before relative to virtually every other asset class due to the current dynamics in play, right up to the bursting of the world debt bubble. And that as a result, we've been given a gift, which I agree. I think a lot of people are a little freaked out right now as to what is in store for gold and silver. But this morning, I also watched one of your, I guess you'd call it quick videos that you put out. And it said that the entire market cap or the value of all the gold supposedly held at Fort Knox or by the Treasury, the 8,300 plus.
I like that word, supposedly, bro.
Yeah. Well, it hasn't been audited since 1953, which is a little disconcerting. But you say that is about the same value as the market cap of Walmart. Now, I know I threw a lot at you here, but in essence, what I'm getting at, the Trump trade and how it relates to physical commodities like precious metals and the debt market. If you don't mind, please indulge me.
Oh, man, look, it's too easy. And I mean this. The dynamics in play are so simple to understand. And this was before the Trump trade, where we are right now. I mean, the writing is all over the place, across the sky, under the sea, everywhere else you want to look, where we're being pushed globally. I mean, I know we're kind of probably most of our audiences here in the United States. I have a lot of European friends. I talk to them all the time, and they say, Greg, if you think it's bad there, wait till you see over here. But anyway, look, man, the mechanism is just too easy to understand. We are being pushed faster now, in my opinion, closer to a financial cliff. The mechanism is right now, as it seems like we're on the same page here, again, to vastly expand the global debt. Again, I want people to snap out of the little boxes they've been put in. But it's all about the United States. We are, of course, just a piece of a much larger mosaic. Okay. Now, the United States is not an entity among itself. What we have here is the same thing, unfortunately, and it's going to continue. This is not just new under Trump or the Trump trade that we're seeing with world leaders around the world who seem to be in lockstep with their central bank. Case in point, we've got Trump here, and I'm not putting the guy down. I know a lot of people are going to take exception to this, but please, what the guy said, and this is a quote, was he, I don't know how he's going to do it because the president doesn't have this power. He is going to bring rates way down. What does that mean? Artificially suppress rates, the mechanism here that's inflated the largest stock market bubble in the history of the world on the back of the largest hyper debt bubble, which is, in my view, the greatest threat to the world, period, the end. We're going to lead up into a liquidity crisis, a credit freeze, same things that were happening in 08. This time, again, it's a little bit different. In fact, it's a lot bit different. But this mechanism here just creates a specific flow of cash through the market. And that's really what I am looking to take advantage of, not for myself, but for everyone who gets it. We got to stay ahead of the curve. If we realize that there's no way to stop this, again, central banks around the world, here in the United States as well, artificially suppressing rates, currency devaluation, how does that help the middle class? I'm going to give everyone a big clue. It doesn't. What we're going to see here, unfortunately, is more cash being pushed up to the 1% and 2%ers, into the banks, who I consider the enemy. But sometimes in this game of economics and politics, you got to sleep with the enemy a little bit and use the system in a way to capitalize. And now cryptocurrency, man, look, Trump has promised to make the U.S. the crypto capital of the world, and it's already playing out to be that way. We've seen the SEC already, not even 48 hours, Andy, 48 hours after the, I'm going to say selection because I believe it was, we're going to see the SEC is talking about rolling back bank regulations. They're talking about rolling back crypto regulations here. So what does this mean for other assets, commodities, gold and silver? First of all, if we understand, again, the mechanism, how cash flows to the markets, we're going to see an enormous, we're already seeing it right now. The stock market is seeing inflows of cash into equities, historic inflows. Meanwhile, we're seeing outflows with regard to the ETFs, exchange traded funds, regarding gold and silver. All right, this presents opportunity in my view. I believe that commodities moving forward, because of the dynamic in play now, pushing cash into the stock market, risk on. Pushing cash into cryptocurrencies, obviously risk on here, means that risk off assets relative to everything else are going to be more on sale than ever and ever. So take advantage of this. I know there's a lot of people that are very unhappy. I heard from maybe hundreds and hundreds the last couple of days. Greg, well, why is gold and silver going down? I spoke about this many times. They don't get it. They don't see the dynamic in play. They also don't understand. People are angry about it. They understand that this is a gift. And I mean gift, because what we're doing here, those of us, you, me, most of the people that follow our work, are stackers. And they realize they're doing this, again, as a way to bet against the debt, bet against the system that's being hyperinflated. This is not going to stop. Embrace the moment here. Understand how cash moves through markets and then capitalize on it. Take advantage of it. Period. I understand a lot of people don't like the stock market for obvious reasons. They hate the banks for obvious reasons. I don't like the banks either. I think they're predatory. But we understand what happened during the last 10 years. What did Trump do? He historically rolled back a regulation with regard to banks. We're going to see more of that moving forward. That's why banks are taking off right now. The financial sector is on fire right now with regard to the market. Equity's higher. Again, we're going to see a mechanism expand, something that I tried to explain to people for quite a while. This is this multiples expansion. In other words, the investors are going to be willing to pay anything. They're not even concerned about PE ratios or anymore. None of that stuff matters anymore. It's a frenzy for people to get in on the Trump train with regard to the stock market, with regard to the banks, and obviously regard to cryptocurrencies. We really can't, put a PE ratios on cryptos. That's just a mechanism. I know a lot of people hate cryptocurrency. I get it. It took me a long time to come around myself. But in this environment, if we don't take action and we just sit back and do nothing, if we're not stacking, if we're not I understand the market is not for everyone, especially the crypto space. I get it. It's extremely volatile. But with regard to crypto investors, everyone knows I'm a crypto investor. Bitcoin, I'm an open book, is my largest holding. I own about 7 different cryptocurrencies. Bitcoin's my largest holding here. I came out publicly and 17,500. I said, people, I think it's a good buying opportunity. Look where we are now. We touched 90,000 last night, just about. It's too easy to understand how cash is moving through the markets. And because of the dynamics in play, we've all been given a gift with regard to precious metals, with regard to cryptocurrencies, with regard to the stock market here. But again, the inevitable is going to occur. I believe we are really close to the end. How do we know that? Because right now it seems like more cash is being shoved up to the rich, the 1 and 2% more than ever before. And this is accelerated since Trump's selection here. But this is, look, 51 or 52 record highs for the S&P 500 this year alone. Meanwhile, our economy is falling to the floor. There's no connection here anymore. And that disconnect is getting worse moving forward. There's no doubt about it. So what do? We logical people, thinkers, those who understand the dynamics in play. I mean, it's a beautiful thing. I don't know another way to put it, but we're prepared again for where we're going. We're being pushed off a financial cliff. This whole entire situation here, built on the back of this hyperbubble and debt, is going to end. And it's going to end worse now that the game remains risk on still. Look, I understand probably more than anybody, maybe not you, I don't know, that the disconnect between reality and the stock market is just so far off the Richter scale, it's hard to get your head around. But it doesn't matter. It doesn't matter. We ride the wave until we don't ride the wave. Right now, we're just riding the wave across the board. It's too simple. People need to be ready for where we're going. Always have the high ground.
Yeah, I respect that about you, Gregory. I mean, you're someone who understands the value of hard assets. You understand the big picture. You're a macro expert, yet you're not married so much to the own narrative or this narrative to be able to see value and opportunity where others aren't able to do that. And I'm going to talk to you about the banks in a moment, but before I get there, I want to just finish up on Trump and his agenda. You mentioned that, and I agree, to have a strong currency, you need a corresponding, to have a strong economy, you need to have a strong currency. And to have a strong currency, you need to have a corresponding rate of interest that's high enough to support the purchasing power of the currency itself. So if artificially suppressed rates create a weaker currency and a loss of purchasing power, then why is President-elect Trump going the opposite direction with his policies? I know you kind of touched on that, but what do you think the real reason behind that is?
Because central banks are in control. They're the puppet masters. They're pulling the strings. All the talk to the contrary is a deception. The same things we heard last time are being echoed louder this time. Trump's going to end the Fed. If Trump really wanted to end the Fed, the number one thing he'd be doing right now is would be adding to our so-called gold reserves, which we may not even have any anymore. A lot of people do not believe we have gold reserves. Now, instead of adding gold to our reserves, he wants to add cryptocurrencies, plural, to the strategic reserve. Look, as a crypto investor, I'm all about it. I like it. It's positive. Okay. But I don't think we really need to make the United States the crypto capital of the world. Or maybe simultaneously, we could make the U.S. the crypto capital of the world at the same time. Look, if we do not return to a constitutional money system, we all lose. It's not about what this puppet is saying or what that puppet is saying. It's, we the people really need to start holding people to account here. No mention at all during the entire campaign by either one of these things about how they were going to add gold to the strategic reserves here. What are central banks doing right now? What do we know? They're adding to their gold reserves right now. But why are nations not doing that? Why are we here in the United States? First of all, as you said, no one has any idea if we had even 1 bar of gold, 1 ounce of gold left. Many people, in fact, I would say the vast majority of people don't believe there's any gold at all. This may be true. How are we supposed to know that? There are some people, of course, and there always are, that are privy to this information. But this is a threat. This is a direct threat to our survival. Because in my opinion, look, these are real money, gold and silver. I think not only should gold be added to the strategic reserves, silver as well. Does anybody believe if Trump was saying that right now, we'd be seeing the precipitous drop that we've witnessed lately with regard to gold and silver? No, we'd see that going up too. Trump is proposing a 5% allocation of budget to making cryptocurrencies part of strategic reserves. How about 5% gold? How about splitting it up? 2.5% and then another 2. But we're not going to hear that. Why? Because it's pretty obvious to me. If we started adding gold to or silver and or both to the strategic reserves, it would counter the Federal Reserve's plan to own it all, to be the lenders and buyers of last resort. They're loading up on gold. Why shouldn't we be loading up on gold? They're fulfilling they know where we're going. Trump knows where we're going. So did Kamala. But again, why do you think people are just so blind? Why do you think that both candidates were looking to make cryptocurrency? They all jumped on that train. Trump is the king. She became the cryptocurrency queen. That's one thing. And then number two, what did Kamala do that Trump started? Look, I'm going to make sure that rates are way lower. He used that word, way. Again, he has no control over that, but he can certainly work with a Federal Reserve chairperson. What did Trump want during his last tenure? Zero. And even negative rates. Went out of his way to call them boneheads. Yep. Love that word, boneheads. Calling them boneheads because they didn't go to zero or negative rates, which would be massively economically destructive. What you said, again, how you outlined it is exactly how I outlined it too. You need a strong currency to have a strong economy. We don't have that. And we need higher rates, not lower rates. This isn't working out for anyone. But again, no one's being held to account. It's turned we don't have a market either. What we have is a clown show. What we have is some kind of freak show, and people are walking themselves now, not being led anymore, walking themselves into their own demise. And it's an incredible thing to see. But those of us who understand the dynamics in play, who maybe think a little bit outside the box, they don't like people like you and me and all people that follow our work. We're in danger. And I am surprised that people like you and I are still out here.
Yeah, no, I sometimes think about that too. I saw your follow-up email today saying that the IRS wasn't very happy with you, and they threw another audit at you. And I think about things like that. We tread a line, but I digress. I think you're amazing, Gregory. I think you're doing an amazing job for a lot of people, and you're one of the only ones I've ever followed. And I read 3-4 hours a day, 7 days a week to be able to stay on top of things. I'm sure as you do. And you're one of the only people I've ever met that isn't charging for your service, which is something I have great respect for. Just to follow up on a couple things you said. So do you think, well, let me first go back to, before I ask you what you think about Judy Shelton and the rumors of her maybe not being the head of the Fed, because he still has another year or two left, but appointed to one of the Fed governor boards, one of the positions. But I want to go back to the Bitcoin meeting in Tennessee where Trump spoke a few months ago. And I want to get your opinion just for a moment on Senator Loomis from Wyoming, her comment. I don't know if you caught that, but right after Trump spoke, she got on stage and she said, I agree, we should have this strategic Bitcoin account. And in order to fund it, I propose, and I'm going to draft a bill that will revalue the gold that the Fed is supposedly holding half of the Treasury to a level sufficient enough to use proceeds to purchase the Bitcoin. Now, we've heard for over a year now the head of the Dutch National Bank talking about revaluing the price of gold. So to your point, yes, I haven't heard Trump talk about gold. I haven't heard him talk about monetary policy. I haven't heard him say anything but pleasantries about Jerome Powell. And even when Powell was asked the other day, well, what if you're asked to step down? No, he said. So I think he's really making that delineation between the Fed and the president, and that there's a separation, if you will. But I guess, to your point, he is not being inflammatory, Trumpism, with Powell this time around. But do you think there's any significance in the talk of gold revaluation? and or of people like Judy Shelton who could come and kind of needle a little bit, if you will, to move towards adding gold to whether it be a strategic stockpile or the way that she's talking about it, because you're big on who the hell wants to hold our treasuries that are being inflated and are volatile and can be weaponized. She's talking about doing a treasury that has a lower coupon than the normal ones, but that is redeemable down the road in gold. So is there a chance that gold could sneak in the back door in this administration?
Man, there's always the chance of anything here, but I don't see anything right now, especially since over the last week, Tony, man, right? That would sway me into thinking that, again, we're going to see more monetary destruction moving forward. And I would love to see, I mean, look, man, I want us to return to a constitutional money system. I wish that Trump would start talking about it. I wish we would get someone that's pro-gold to sit somewhere in the Fed, but they're all against gold. Now, one that I know of, we got Lex Luthor here. I give them all like these lovely names here, Neil Cash and Carey. Neil Cash Carey, not a very big gold guy. These people that dwell in the halls of the Federal Reserve, in my view, they're the enemy. In my view, they're going to fulfill their goal. Their goal has nothing to do with gold at all. We can hear a lot of talk. Talk is cheap, man. We heard a lot of the same things the last time. Didn't happen. Trump was going to end the Fed because of this, that, and the other thing. We were going to pay off the debt in 2 years, and tariffs were going to do it. Didn't work. And people bought it. People buy the nonsense instead of looking at the actions. And then, of course, what they tend to do, which really bothers me a little bit, is they blame someone else. Oh, it's not his fault. It's the fault of this, because again, it would make people look bad upon themselves. But this comes down to accountability. I sincerely do wish that we would get something like that. I don't think it's going to happen, unfortunately. I believe we're going to continue to see the mechanism of currency destruction, purchasing power, because central banks are doing it collectively around the world. They're on a race to the bottom to destroy their currency, and along with that, the economy and the people as well. Unfortunately, moving into a whole new set of rules, a whole new paradigm, it just looks like that to me. Until I see concrete proof of something different other than just talk, because again, talk is cheap, then I'll change my perspective. For right now, first of all, even if that were to happen, let's just say we're all in the right spots anyway. My perspective on everything is very straightforward. It's very simple. And maybe it's too simple. I don't know. I tell people what I'm investing in, what I'm doing, and why. Everyone knows what I'm doing. I'm an open book. I've been that way for a very, very long time. We would not have to deviate from that. I mean, people right now who are following our work, they know what real money is. They understand that we need to return to a constitutional money system. But again, the threat, you have to understand, and I think most people who follow our work understand that, a central bank's power resides in simply one thing, and one thing only, that is their ability to inflate. The more debt they issue to the world in the form of currency, and they're issuing it through one door, buying it back through another door, keeping rates artificially suppressed, this is massively inflationary. It also increases their power multiple fold. You want to end central banking? It's the easiest thing in the world to do. Prevent them from issuing, or the Fed in this case, from issuing $1 of debt, just one. The system would start to collapse on itself. We're not hearing any talk about that. Every single, so far at least, promise that Trump has made is inflationary. There's nothing that's disinflationary here. It's going to create more inflation. Currency devaluation obviously is a part of it here. It's not going to stop the mechanism of pulling more cash into the now. The restraint that would have to be austerity, let's put it that way, that would have to be forced upon the people if, in fact, we went to some type of a wealth-based system or commodity back. They don't want that. People always get what they ask for. With regard to the system, a cashless system, who uses cash anyway now? Everyone's swiping and swiping. They want those rewards on their credit cards. Oh, you spend this much, you're going to get this much back. I mean, that's what people want. So that's where we're moving into the direction of this tokenized worldwide system. They're going to streamline it. Trump created his own business around this as of late. To streamline cryptocurrency transactions around the world, to allow the borrowing of cryptocurrency, the buying and selling of it as well, his own crypto token as well. The writing is on the wall. I don't think we're going anywhere near that right now. Until that changes, and even after, we're not going to change our strategy, man. Well, people who follow our work understand where the real value is. And right now, I can't imagine a more on-sale asset class, looking at what's happening here to the crypto space and the markets and the banks, than metals, man. I mean, nothing has changed on my end. I am still the biggest raging bull with regard to commodities across the board. They're real things. More specifically, silver, which is my favorite asset of all time. I will never waver from that.
So anyways, let's transition to the banks. Because we're talking on the subject, while we're on the subject, I was watching an interview that you did with Daniela Camboni. She's great. It was a great interview. And you talked about two things that caught my attention. Obviously, you just mentioned you do believe that bank deregulation will be rolled back, and you would expect investment banks to again engage in wild speculative trades, especially in the derivative markets. You've been saying that fairly consistently. Now, I've been saying something publicly for about almost a year and a half now, maybe even a little bit longer, and I got to tell you, I was pleasantly surprised to see that you and I agree on this. And I didn't, I try to catch as much of your work as possible. And I've never heard you say this, but yet you mentioned to Daniela something saying that you've been talking about this for a while, which I know you have. And you're talking about Bank of America. And I've been saying that they would be the sacrificial lamb that would trigger the crisis or a consolidation of the banks. I've been saying this largely because of Ted Butler's belief through empirical evidence that they've been short over 1 billion ounces of silver and about 45 million ounces of gold. And listening to your interview with Daniela, it was obvious that you feel that Bank of America is also on thin ice. But before I ask you to comment on the banks in general and on Bank of America, I want to add a little color to your interview with Daniela. And she was very astute in mentioning the Bank of Lindsay, Oklahoma. And I think, however, in her comments to you, she missed one very crucial point. And I want to get your take on it and reflect this into the Bank of America. Because I think this is something that would add a lot of fuel to the fire. I want to read to you something. This is just the press release on the First National Bank of Lindsay, Oklahoma that failed. Now, as a side note, I think it's ironic that it was in Oklahoma because when Silicon and Signature failed, there was a hearing, a Republican hearing at the House. And the senator from Oklahoma said to Janet Yellen, Madam Secretary, you just bailed out these banks. But the Dodd-Frank Act made that illegal. The bailouts are no longer law of the land. It's bail-ins, i.e. you're a unsecured general creditor, last to be paid. And he said to her, listen, you bailed out these banks. We were told that that's illegal. What am I missing? And she said, you're right, Senator, we did. It was an uber majority vote of myself, the FOMC, which is the Fed, the FDIC, and the president. And we deemed that these banks were so systemic as to it bringing down the system. We had to bail them out, but it won't be at the expense of the taxpayer, right? It'll be the FDIC. And he said, so, okay, Madam Secretary, does that mean if a regional bank fails in Oklahoma, my constituents will be made whole? No, Senator, they will not. They will be bailed in unless it's that same uber majority vote. Now, I want to read something to you about this bail-in and then put this in context with my question on Bank of America, which I do agree would, in my mind, would be the sacrificial lamb that would trigger this consolidation, that would trigger this panic. Anyways, let me read this to you. First National Bank of Lindsay, Oklahoma was closed by the Office of the Comptroller of the Currency with the FDIC appointed as receiver. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud that revealed depletion of the bank's capital. The OCC also found that the bank was in unsafe or unsound condition to transact business and that the bank's assets were less than its obligations to creditors and others, whoever the hell the others are. The OCC is referring the matter to the United States Department of Justice, which has a wide variety of tools to hold individuals accountable for criminal acts and focuses on victims and all of its matters. Okay, cool. To protect depositors, the FDIC has entered into a purchase and assumption agreement with First Bank and Trust based in Dunklin, Oklahoma, which will assume the insured deposits of the failed bank. The insured. The sole office of the First National Bank of Lindsay will reopen as a branch of First Bank and Trust Company during its normal business hours on Monday, October 21st. All depositors of the closed bank will automatically become depositors of First Bank and Trust, and their insured deposits will continue to be covered by the FDIC. Customers are not required to change their banking, blah, blah, blah. Here's the point. For uninsured deposits, The FDIC has announced it will make 50% of those funds available to depositors starting Monday, October 21st, with the possibility of increasing that amount as assets from the failed bank are sold. But remember, up here in the statement, it says that its liabilities to creditors and others far outweighed its assets. So in essence, you have $1 million in that bank, you get $250. That leaves $750. You get half. That's $375 equals $625 when added to the $250. That $375 is gone. And in an interview with David Morgan, he said to me, Andy, I've done a lot of research on this. They have up to 4 years to pay the remaining, if at all, and it'll be in the form of bank stock. So in other words, that $375 is gone. Now, as Daniela pointed out rather astutely, there's not a damn word, not hide nor hair anywhere about this story. It's almost like a trial balloon that they're throwing out there. You know, when Silicon and Signature were bailed out, there were hundreds of millions, if not more, in uninsured deposits. Oprah Winfrey and tech startups and all this shit. And now we see a little bank in podunk flyover country, Oklahoma, with only 7 million in uninsured deposits. Just 7. 3.5 gone. Now, let me ask you a question about Bank of America and the banks in general. What does this all mean to you?
Well, let's just look at the big picture here. What we're really talking about is a system that is, and I'm not just making this up, is completely insolvent. It's a black hole and no one knows how deep it is. It can never be filled. I mean, these institutions have balance sheets loaded with bad loans that are getting progressively worse. Loan defaults across the board continue to accelerate. All this stuff is being hidden, right? And it has been for quite a while now from the public via the mainstream media outlets. They don't talk about this stuff. They got to fill it all with some kind of other nonsense here. The world financial system is a perpetual vacuum. It just sucks and sucks and sucks more out of it. Now, it's just too simple to understand this here. And I said this before we started to see the regional institutions go down. I started thinking, look, I talk to everybody, and a lot of the stuff that comes out of my mouth, look, everybody knows this. I have friends in the banking industry, some of them pretty in the biggest banks on Wall Street. All right. And I hear things and I relay that information to people. So what we have here is a situation that is encompassing all of these institutions. That is no loans, no deposits, no deals. The banks are now offering people bonuses just to put your cash in there into these institutions. They're insolvent. So what we've seen here is, because of the mechanism of there's no loans, no deposits, and no deals, is the system become even worse off than it is now. We're going to see more of a consolidation of power as a new system is instituted. That's where we're going. And the consolidation of power is a big part of it, and they need a sacrificial lamb. Now, my research, the people I talk to, stuff, it's all points towards Bank of America. And it's astonishing that you and me are talking about it, and there are other people too. So, you know, when there's smoke, there's fire. So I've been telling people for a long time, look, understanding how twisted this mechanism is. And what people don't know, they don't never read the fine print. When you put your cash into these institutions, it really doesn't become yours. It becomes theirs. And not only that, we don't even have a fractional reserve system anymore. The cash really isn't there. These are digits on a screen. They don't exist. They're not on the elemental chart. These institutions can do whatever they want with it. Now, with regard to bank deregulation, going back to, I think, how you started, we're going to see more of that. And that means we're going to see wild speculation. Who's going to be responsible for that? Certainly is going to be these institutions. It's going to be we the people yet again. There's no protections here. Whatever protections we had will roll back, most of it, at least during Trump's last tenure here. And they're going to be rolled back even more. And this is exactly what the investing banks want to see. It's going to allow them to maybe fill in the black holes to a certain degree of their balance sheets. They're all in the negative. I don't care if you look at JP Morgan, which is the largest bank on this planet by assets, and you weigh it against our known whatever they're betting on here. And most of that is derivative stuff. I mean, they don't mess around dollar for dollar. When you hear about X investment in XYZ, these are all derivative trades. And a lot of it, all of it, is off balance sheet. So you're not able, because why is that? Because the derivatives market is kind of another black hole within a black hole. You can't see in it. And it's done that way. Does anyone believe that's by accident? No, of course not. It's by, so people can't fathom how bad the system actually is, how toxic it is. When people are told the face value of, let's say, the debt, now you got to consider all the derivative bets on either side, which are layers and layers and layers and layers and layers deep. But people don't know that stuff. It's too big for them to understand. But the fact of the matter is, look, the entire system is insolvent across the board. It's a black hole. And that black hole, because of the model that we all follow around the debt-based system, is just going to get worse. It can't be fixed. It can't be fixed. I mean, I guess it could in the abstract, but there would be a that, and things are going to change anyway for people. And I think most people are prepared, at least the people who follow our work. I think we've done a darn good job at allowing people to understand where they get it, the people that follow our work. And some people, no matter what you do, they're not going to get it. They can't put it together in their head. They have to be told it's this fault or it's that fault. It's kind of blame must be assigned. And politicians are experts at assigning blame. And it's really interesting that you brought this up. During the presidential, I say, clown show debate, not one question about monetary policy. Zero. The same thing during the vice VP presidential's clown show debate. No questions at all. Why? Does anybody find that kind of disturbing? I was waiting for it. But of course, we don't get that. It's always like, okay, it's this person's fault. It's that person's fault. It's the fault of these people. It's the fault of that, whatever it is. Everything to keep people's eyes off the ball. In this case, of course, the central banks, and this is the Federal Reserve. So all this talk about, what so-and-so might do with the Fed and so-and-so, it's so far-fetched. It's so abstract. I don't see the system changing, unfortunately. I see it. And you can see it right now. Looking at the markets, looking at the flow of cash through the markets, what's going on here. And it's all going to make the Fed much, much stronger moving forward, unfortunately. And the banking system, again, we're going to get a sacrificial lamb. Is it going to be Bank of America? I don't know. A lot of people pointing their finger over there. We'll see.
Does that lead in your mind to a central bank digital currency?
Oh, but beyond any doubt, that's where we're being led to. Oh, look, and what scares me, what are they going to do? What's going to be the scapegoat? The system, if you understand, and I know you do, and people follow our work as well, the Federal Reserve has been portrayed for a very long time as being on the side of the angels. They can't be blamed for anything because they're the ones that are going to be, unfortunately, in control of the new system. It's not just the Federal Reserve. I've been telling people this is a war. These institutions are on every continent around the world. That's their basis here. And the war is against us, and they are winning, unfortunately. I said today, I think it was, we need to rise up. We won't get that because people, why? Why won't people rise up? It's very simple to see. People have been made to be dependent on the system, slaves to the system, to being fed by the system. This is deliberate. Why would people want to bite the hand that's feeding them? Unfortunately, that's why there's not enough of us that we could make any real change here. Of course, you're going to be told this is where your hope is and that's where your hope is, and hope ain't going nowhere. It's actions, not words, that make a difference.
Yeah, I agree. I talk a lot about Lael Brainerd, the number 2 at the White House. She was at the Treasury, and then she was number 2 under Powell as vice chair at the Fed, and then she became an advisor to the Biden administration. She is a modern monetary theorist. She ran Point for Fed Now, which came out last year, being piloted. It's like Venmo and Zelle on steroids, backed by the Fed. And of course, she, while at the Boston Fed, worked with MIT in development of a CBDC. And I've always felt that's kind of where we are heading as well. Just 2 more questions, Gregory. I appreciate your time, man. You're very thorough in your answering of these questions, and you may have covered a little bit of these while we spoke, but you say that we're watching the end of an empire, and sadly, I wish I didn't believe you, but I do. and that we are no longer the economic engine of the world. And that's been true for a long time, obviously. And I mean, we're the financial, you could say the financial engine, sputtering, if you will, but not the economic engine, and that's for sure. So the global dominance you mentioned is shifting eastward. Now, this is my bailiwick, is what I've been talking about for a long time. It becomes a little bit more murky when you enter in this current administration to be. But in a nutshell, what's your view on the BRICS?
It's obviously a direct threat. It's being downplayed. Have you noticed that lately? I pay attention to things, and there's a lot of counter, whatever you want to call it. I don't know if it's propaganda or whatever. Even on my own blog, people are trying to downplay it. And I would, I'll be honest. When this thing with the BRICS started to first materialize, I didn't see it honestly as a threat. But as I've seen it develop, obviously, it is a threat here. They're working on a payment system now, a worldwide payment system, and that should worry people as well. It's pretty obvious to me that the Federal Reserve will want to keep the U.S. dollar as the world reserve. It gives them enormous power. I mean, the demand for their product. When the central bank essentially has the world reserve currency, basically they got the world by the throat and maybe by a couple of other body parts that we won't talk about here. And that's an extremely positive thing for the central bank, because the demand for their product obviously is kept up, real or artificially. Now, the fact of the matter is, look, this is no secret. The world today, regardless of even what's going on with the BRICS, and they're capitalizing on the situation, in my view, is turning its back on the dollar, turning its back on the United States. I mean, nobody wants our dollar. Nobody wants our products anymore. It's very sad to see what's going on. If factory orders in the United States are continuing to drop, manufacturing in contraction, factories in contraction, business activity in contraction. I mean, and then we have a stock market that keeps going up. I mean, the disconnect is so in your face. But as the world turns their back more so on the United States, that means there's going to be less demand for dollars, obviously, And what does that mean? That means that, again, what we're seeing here, and this is what people were duped on a massive scale during the whole run up to the selection here, the blame game and why inflation was not Biden's fault. It's a product of money velocity, something that you clearly understand this. I've been talking about for 10 years that at one point we're going to see all these extra bills or whatever form they exist start to chase the same amount of goods. And if you look at the rate at which cash has moved through the economy, all through Obama, all through Trump, all through Biden, now all of a sudden we're kicking up. That's what, with that little kick up in the money velocity, is it because our economy is strong? Quite obviously, it's all these extra bills coming over the roost. This is economics 101, man. But people, again, they were not told this. See, Kamala could have used this as a weapon to say, okay, you know what? It's really, look, why are we seeing this now? But either she didn't know or she was told to keep her mouth shut. Trump could have said the same thing, but no, again, Fed must be portrayed on the side of the angels. We all knew that this was going to happen here. There's no way that you can have the last three presidents way more than double the debt, take every president before them to George Washington, and not have a side effect. The side effect is what we're seeing now, but people don't know that. They don't know that because they haven't been told. They've been lied to. They've been told it's this person's fault. It's these group of people's fault. It's worth everything to keep them deceived. And that should tell people something.
Well, speaking of lying, I lied. I said I only had one more question, but since you said this, I have two. And we appreciate it, man. You're fascinating, brother. And you answer these questions that kind of make me think about another question. And dovetailing on what you just said, to me, and correct me if I'm wrong and maybe expand on this, it's not even as important what currency is transacted in, because we're seeing so many of these countries do trades in local currencies as a way to not trade and be reliant as much on the dollar. And some people think that is a precursor to some form of a common settlement currency and whatnot. And they've come out with BRICS Clear and BRICS Pay. And Obviously, I'm sure you're aware of what the IMF did by pulling the rug on Enbridge after being involved with it for the last 4 or 5 years at the 12th hour, which was very dirty. But to me, it's more along the lines of what is the savings vehicle? What are these countries putting their excess reserves into, or how are they saving? And it seems to me that they are saving no longer in U.S. treasuries, but in commodities. And as Zoltan Pozsar put it, Bretton Woods 3, a system that will be more about tangible commodities, whether they be precious metals or cryptocurrencies or base metals or soft commodities, whatever it may be. It just seems that they are no longer saving in treasuries. Is that as big of a deal as I think it is?
Oh, of course it is. And that's a phenomenon that is not new either. This is something that's been going on. People know that. I believe that most people are aware of that dynamic that's in play. Look, there's no way out of just, it's just too easy, again, going back to what I've been telling my people for the longest time. If you pay attention to things like you just talked about, if we understand the dynamics that are in play, and no one does. People mostly get their information from where? From the mainstream media, the propaganda. They're reading a script, man. They're sitting there, these people, and what drives me nuts, it probably drives you nuts too if you do this, I don't know. I like to, as soon as I hear a concept, let's say on CNBC, I say, click, what's Bloomberg talking about? All of a sudden, it's the same thing, verbatim. It's almost really like they're being told what to say and when to say it. So they all get the same message out at the same time. In my opinion, I just look at this stuff and I go, it's a psyop. There's a reason and there's a rhyme to it. And it's interesting too. You notice the concepts, it's repeated three times. It's almost like a form of hypnosis. Anyway, going back to what we really, to me it is. I think people have been psyoped. But besides that, there's
I agree.
definitely going on. But there's no doubt about it, man. Well, first of all, look, every nation, every so-called developed economy, we're bankrupt. We're absolutely bankrupt, insolvent, just like the financial system is. And it's all being pushed into this new thing. It just seems too obvious to me that the current system is being dismantled. The economies of the world are being taken apart. People are paying the price for it, but they don't know what's going on because, first of all, they're not paying attention to shows like yours, which is unfortunate. They should all be watching. Forget it. Turn it all off because all you're going to get is propaganda, and that's where most people get their information here. Unfortunately, this stuff that we talk about, people don't want to hear it. People. They either they're afraid, they think the concepts are too hard to understand, and they're really not. It's just a matter of just paying attention a little bit, following the flow of cash through the markets, which is really the number one thing that I do. And going back to the debt market, as you alluded to here, it's the key to everything right now, and it's the only thing I look at for the most part here. Obviously, there's other dynamics in play, but I don't even care what the stock market is going to do. We can gauge what markets of the world are going to do based on dynamics in play, how cash is going to flow through the markets. But with the mechanism here of globally rates being artificially suppressed, it's just too easy to understand why this has been put in play to, again, reinflate bubbles, to create an environment where the price action of every asset is so distorted that it doesn't make sense, not even to me. It's very difficult. But we realize that these distortions here are opportunity, and it will normalize. So realizing these things gives us an enormous edge.
Yeah, I think the distortions are something that have had me flummoxed for a long time. I don't remember who you were talking to, but the question was asked, do you think that the market's so far overvalued? And you did the math and you said, yeah, it's wickedly overvalued. And that is one of the reasons I think people who are more hard asset oriented have a hard time justifying, because I think everyone who's been paying attention understand that through suppression of interest rates and easy money, that asset prices have been distorted, certainly through, hedge funds borrowing money at next to nothing and jacking up asset prices and everything from real estate to bonds to stocks, even to crypto. And yet your message is to ride the Trump wave, and you'll tell people when to get off that wave, which is rather admirable. But I think that is some of the disconnect. So my last question Greg, and I really, really appreciate you coming here, man. And I got to have you on again. And I am going to come, seeing as that we both live not too far from each other. I'm going to drive up to you and buy you dinner, man, and sit down with a glass of wine and really pick your brain. I think that to me would be as fun of an evening as I could imagine. Well, and you can count on that. You're going to hear from me soon. But all right, here's the last question. And I wrote it down and I highlighted it and I titled it, "Why Are We Being Destroyed?" You speak of the deconstruction of the world economy, man, and that the money being shoveled, as you mentioned, to the 1%. All of that I can see very clearly. I mean, it really is very easy to see. And, you know, I'm friends with Robert Kiyosaki, and he said something to me a long time ago that's always stuck with me. And he says, you know, people can't get out of the way of what they don't see coming, which I completely agree. You know, would you like to be in a batter's box with Randy Johnson, you know, the guy that Hall of Famer is 7 feet tall, through 100 miles an hour? Would you rather be blindfolded or not? Would you like to see what's coming at your head or just be hit by it and get run over by it? And I think, you know, the fact that you are giving people heads up, you're telling them, I got your back, I will always have your back, and when it's time to go, you'll know. You're giving people an opportunity to get not only out of the way of what's coming, but actually to get ahead. So my question is, if this is all a grand plan, as you say, from the central bankers, in your mind, what is the end game? What is the end game with all of this? Because I think that's really, you know, I don't mean to put you on the spot, but to me, that's the question I'd want to know. What does Gregory Mannarino see as the end game to all this shit that's going on with the central bankers and the distortions that have been created through all of these years?
One word: neo-feudalism. We're being eliminated. This is an extinction level event around the world. We're going back. In many ways, we already have it. A two-tier society: extreme haves and extreme have-nots. A control mechanism. And unfortunately, I'm going to say something I've been telling people for a very, very long time. I believe the end result is going to be a great loss of life. The greatest threat to human life on this planet right now isn't nuclear war or war in general, or even a disease process. It is the bursting of the debt hyperbubble. They're going to lock up the system. We're going to end up in a credit freeze situation. That was the real issue during the meltdown of 2008, the financial crisis. Everyone was told to look at the stock market. That wasn't the underlying problem. The credit markets were locking up. Interbusiness lending was stopping. What did they do? They rushed Bernanke over into Washington. He told our lawmakers, our loving, caring lawmakers, if we don't start to pump billions into the system right now, by Monday, we won't have an economy. It wasn't the stock market it was pointing towards. That's what they're doing here. They're going to push us into another situation like that. When the debt market bubble bursts, and I think we're all pretty much on the same page that that's going to happen, that means credit stops. The flow of credit through the markets ends. That means you go to your bank, all zeros, no cash there. First of all, there's going to be what they want to elicit here. First of all, they have to create hatred. They have to make that to divide people. They have to cover their faces. They have to do whatever they can, keep lock you up in your house, whatever they got to do. Find reasons to spend, pull more cash into the now. But at one point, this is going to, it's already starting with all these extra bills coming home to roost here, but the locking up of the system is going to occur. When that happens, there's going to be pandemonium in the streets. That's why I tell people, make the right alliances with your neighbors. Start to realize we are not each other's enemies. Every Friday, what do we tell people every Friday? Love each other, care about each other, be charitable to each other.
Stop the hatred.
We need that because we're being eliminated. And that's the end game. The end game is to have control, ultimate control. A big part of this is this one world tokenized system that we're going to have. Central banks are killing their currencies on purpose, including the Federal Reserve. We're feeling the brunt of it, but where's the outcry? Where is it? Nobody. In fact, what we're hearing is we're going to get lower rates, promises for it, which means obviously we'll loss of purchasing power. Where's the accountability? People don't know because, like you just said, they can't see the freight train coming at them because the people that they respect and some people love are not telling them the truth. They're being deceived yet again. Imagine how shocked, dude. It's unbelievable. But once you see it, and I hope we woke up a few people here now, You can't unsee it. That's the truth.
Yeah, just to put a bow on that, I've been trying to explain for a while now how important credit is. It's a system that runs on credit. And I try to explain just how a simple loaf of bread makes it to the grocery store. It starts with the farmer who's on credit to buy his combine and his diesel fuel and his seeds, who plants a field. And then he finishes his harvest, and he takes all of that wheat and he sends it by truck. And the trucking company is on credit for their trucks and their salary and their diesel fuel to the flour mill. The flour mill is on credit to run their operations. They process it, and then they deliver that enriched flour by truck again, who's on credit, to the baker, who's on credit, who then makes the bread and delivers it by truck again, who's on credit, to the grocery store, who's on credit. And the amount of credit that has touched that loaf of bread from seed to finished product is extraordinary. So kind of what you're saying is that if there is a lockup on credit, the credit freeze, if you will, no one trusts, no one lends, that creates a very, very scary ripple effect. Is that pretty much correct?
Dude, you just nailed it better than anyone I could have possibly imagined. You nailed it to the wall. And that's exactly where we're going, but people have no idea of it. The system functions for one reason, and one reason only, because people believe it's going to continue to function until it doesn't. And that was the real issue during the financial crisis that we were told was contained by the same guy who said that gold wasn't real money. Oh yeah, of course. And it's these same entities, not just these central banks, who are responsible for everything you just outlined, and they're going to be responsible for it ending, and then we're going to trust that they're the ones that are going to have our best interest moving forward. You got to be kidding me. We're being pushed that way, man, deliberately, on purpose. This is not a comedy of errors. This is no accident, period. Everything is happening by design, and people better get hip to it.
Yeah, man. And I hope by now people who watch this understand why it's important to follow you. Of course, I will post links to your site and your YouTube channel below. But any parting thoughts or best ways for people to follow you?
Oh, people can find me pretty easy. Just Google me. But look, the bigger picture is I really hope that people start sharing work like this, because I cannot imagine where they're going to hear two guys who get it the way we do, and then our people, they get it too. So I want to call on every single one of them to get this stuff out there, share it. You like this stuff, ask for more. Let's try to wake a few people up, man, because if we can do that, if we could just one or two people, we've made a positive difference, and that's really what matters to me.
Gregory Mannarino, man, I can't thank you enough. You are a rock star in this industry, and thanks for coming on, brother. I intend to stay true to my word. You're going to hear from me. I'm taking you to dinner. I'm coming your way, and I look forward to picking up where we left off. But honestly, brother, thanks again for coming on. Much appreciated.
Thanks for having me. I really appreciated being here.
Little by Little with Andy Schechtman.